Hey everybody, thanks so much for tuning into Young Money Investments. My name is Cameron Bennion, and today we have Stock Pick Sunday round 50 million. So we are going to go over a couple of the plays from last week. We're going to go over some of the picks that I had picked out, see what they did, go over kind of my recommendations and things like that. It was a really good week, basically in part due to the fact that I went so large in my sizing and really ended up playing the market really well and then selling out of some positions. One of them being Tesla that I did not mention last week in the picks and everything. But I wanted to go over those. There's a new pick that I also have that I want to throw into the mix. It's going to be one of my larger positions that I haven't actually really talked about much. I think I got into it back when this company dipped to about 170. Man, actually, it might have been like 163, I think, back in the day. Back when we had a large market pullback. This was probably 3 or 4 months ago. So today we are going to take a look at eBay, L Brands, Caterpillar, Callaway Golf, and then the fourth is obviously Facebook. So I'm sure a lot of you are really interested and want to know kind of my thoughts and opinions on Facebook. I will get to that one. So if you want to, you can always scroll to the end. But some of these plays are actually really valuable as well in terms of swing trades. So let's get into this right now. So I'm going to, let's see here, we'll minimize this screen down here. Let's pull up Thinkorswim and let's get into it. So I hope the markets have been treating everybody really good lately. Let's see here. Perfect. We'll go to about there. Yeah, that should be good. And then we are going to, let me make sure I'm pulled up right. Yeah, that should actually be fine. That should actually be great. So right now, the first one that I want to talk about is eBay. So eBay was one, and we're actually already on eBay. eBay was one that last week, if you look at my board here, I had, so I actually did not share with you my stop losses, my shares, where I was planning on selling out, where I was planning on buying in. But currently, let's see, here we go, 33. Okay, perfect. But currently it had a little bit of a sell-off. So if we zoom in on kind of this recent week's time period, you'll notice some consolidation. It's kind of breaking through this level of support that I had set up right here at about 33.90. I do see, like I said, still long-term value. You can see where it started trying to break above, and the market had a little bit of a sell-off on Friday. So I still see the same thing kind of going on with eBay. I plan on having most likely a little sellout point right here at about 36.05, and then having another sell-off of another part of my position right up here at about $38. So that's kind of the play for eBay currently. As you can see, if you could snag some of these shares down here in the lower $33 range, I think there's a lot of potential for profit. Even if you're buying right here at about the $34 price point. Gosh, this mouse is so gay. So freaking stupid. Style. There we go, drawings. If you take a look here, even if you were to buy in down here and write it up, you're looking at about a 5.5% return. And then if you're able to write it up all the way up to here, you're looking at about a 12% return. So that's what I'm looking at in terms of my eBay position. I'm currently pretty heavy in my eBay position. I want to say I'm at about $56,000 in my eBay position currently. So I'm heavily invested in this one. This is one of my largest positions next to Tesla currently. So I'm really betting big on eBay. I could see some more consolidation, but I really do see a low price point in that right now. eBay, moving on, we're going to look at L Brands. Now, L Brands is another one that has had that massive sell-off and continues to sell off down to here. Now, this would be a scary point for a lot of people. I think where you'd go, okay, it's breaking through support right here that I'd previously drawn at about 31.50, 31.70, where it's currently trading at right around $30.70. Now, this would be scary if it wasn't for one thing, and that was some of these wicks that we have seen previously down here in some of these candles, these bodies, right at here. So what I'm going to do is I'm going to draw a support line through here and take a look and see kind of what we're looking at. So if we hit it right there, even Steven, you're going to see another nice level of support. So currently on L brands, I'm looking at a position. I mean, I think I'm sitting at about 24, 25, yeah, $25,000 in my L brands position. I'm down about 2.9% on that position currently, just because of where I'm average cost, and I'm averaged in at about 31.69 is what it's looking like in my main swing trade account. With that being said, I see some really great buying opportunities right down in this area, because even if you buy it here and you're able to ride it back up, you're looking at a 3% return. If you're able to ride it back up where I'm thinking we should be able to ride it into, you're looking at about a 9 to 10% return on that position in L brands. So again, I see some value in terms of a swing trade in L brands currently, just at where the pricing is set on these. I really do like this company. Again, I like trading long term. Good value companies that I could see holding for a long time if my swing trade didn't work out. If you're looking at the RSI indicator, it says it's at about a 37. I disagree. I guess I can't disagree with it. Pardon me, but I just think this is, in terms of where I normally tell myself I need to buy, I would normally want to buy an RSI down here at about 24. But again, if you would have bought the RSI over here, you still would have been writing it down. So I see buying it right here in this position a great little buying opportunity for L brands if you're looking for a swing trade this week. Next one we're going to look at right now is going to be Caterpillar. So Caterpillar is one that I've talked about probably for the last 3 weeks or so. I noticed this consolidation pattern right here where you would get a nice little bump intra-week. If, again, my mouse would actually work for me here. A nice little intra-week swing trade where you could have traded from here all the way up and looked at about a 2.9, 2.5% return on Caterpillar if you were trying to basically day trade or a swing trade in a couple day position on this. We're finally seeing some consolidation on this, which is making me really happy. I think I'm up about 3% or so on my Caterpillar position, up about $1,000 I think on this position overall, which is nice. I think I'm really happy with that position. I'm looking to probably have a sell point somewhere up in this range. And looking for probably some more consolidation. I have a lot of capital tied up right now, and that's kind of why I'm wanting to get out of some of these positions and take like a short-term gain, where I do see more long-term value in writing this up. I want to kind of peek out, take it where it's trading right up here at the SMA line, and then be able to just cover some profits, potentially get back into this and play it because I understand the stock so well. And that's what I like about these companies, is the fact that when you get to know these companies really well, you tend to go, okay, I know where it's gonna peak out, and I know where it's gonna sell off. I know where it's gonna peak out, and know where it's gonna sell off. And you can start getting these shorter swing trades, if not day trades, going with these companies because you're familiar with them. The only reason why I can invest so much capital in these companies is because A, I believe in them long term. B, I've seen the pattern so many times, and it helps me understand it a little better. And C, I think I only have an A and B reason. I don't have a C reason right now. But Caterpillar is this one right here. Last one I'm going to look at, sorry, before we look at Facebook, is Callaway Golf. Actually, I should go over Tesla. Callaway Golf has had some spikes recently. Just on Friday, it had a horrible little sell-off. What I am going to do here is I'm going to look, and I think I almost see some support right here where it's starting to tap out. You can see where it consolidated last time right in this range. And you can see where it's touching right in here where it had a little peek out. So what I am going to do here is I'm going to draw basically a little support line right in here. And I'm going to look to probably sell out and take a slight return on this position somewhere right in here. Now, if you're able to, again, buy into Eli, look for about a $19 buy-in somewhere down in this range. Even right here, it's not bad, because if you were to buy in and then sell out up here, you're still looking at a nice little 3% return on your investment in Callaway Golf. So I see great long-term value in this. I'm going to keep most of my long-term position, but I am going to swing trade Callaway Golf as well, because I'm understanding the pattern. I'm understanding the results. I'm understanding what's going on here. And this SMA has acted as a nice little basically support line for the stock in terms of what we're looking for with a swing trade. Last one that I'm going to talk about is Tesla. So Tesla is a company that I have, again, another fairly large position. All these positions I've talked about are over 25,000, I think, in each of these. Tesla, I'm currently sitting in at about $60,000 in my Tesla position. If it would actually load up, or if I actually entered the right ticker symbol, TSLA is the right ticker. I'm looking at a lot of consolidation right down here in that 297 mark. You can see a lot of support lines through this range for Tesla. I was liking the $300 support right in here. You can see some of this consolidation here. I would worry about a Monday sell-off, and this is where I'm going to zoom in for you. I would worry about a Monday sell-off bringing Tesla down here to about the $290 price point. If you do end up getting into Tesla at that price point, I think you're going to run into a lot of really good opportunity, because you're going to be able to trade this up probably close to, well, I don't think you can ride it all the way up to the EMA here, but I do think you could ride it up into this range in a short period of time, being able to cover about a 4 to 4.5% return on your investment. So I'm currently up in my Tesla position. I think I'm up about $1,000, $1,800, but I am using a lot of capital, and I'm getting very ballsy in terms of what I'm actually doing with my Tesla position and where I understand it. Anytime you can buy Tesla right around the $300 price point, it is a good long-term investment, because Tesla, as it gets closer to September, I think Tesla will be able to report that they are profitable. And I think Tesla is really going to start taking off. So I don't want to sell out of my position, but with the volatility that Tesla has, I like these short day trades. I like these short swing trades with them, because it gives me the potential to make more and more money. I'm more and more, as time goes on, becoming more of a swing trader than a long-term investor, although I love the value of a long-term investment. And so that's what gets a little difficult for me. But if you can buy in, like I said, right around here at this 293, 294, basically 293 to 297 price point, you are going to be golden in terms of being able to ride that up and make a short little gain on it. The markets are going to be a little bit crazy, I will say that as well. Probably coming up Monday, there's been more crazy Trump stuff going on, and anytime that happens, we do tend to see some volatility in the markets. Now, Facebook. So this is one that is probably my most sure position long term that I could recommend right now. The reason why I love Facebook right now is for several different reasons. I love Facebook for the simple fact that Facebook is going to be such a profit engine in the coming years because of TV advertisement being switched over. More and more of these large companies, Palmolive, Procter Gamble, Chevy, Ford, auto dealerships, those kinds of things, as they realize that people aren't watching their TV commercials as much, they're going to continue to get into the online social media advertising platform. And that is where a lot of that money is going to go up. Ad revenues are going to go up. The price of ads are going to continue to go up. And so I think it's really important to be able to go, is it still working? Yeah, it's still working. I think it's really important to be able to go, okay, this is where this company is headed. It had a revenue beat of 42% year over year. That to me is massive. When any company can beat revenues, 6 years old, multi-billion-dollar company can beat it by 42% and then lose its value of about 20 to 24%, 25%. Over the course of a day, that is the largest drop in stock market history for any big company like that. The value that Facebook dropped, that 120 to 140 billion dollars in one day, is so much money that you can't even comprehend. And a lot of that is due to the fact that hedge fund managers, George Soros, Ray Dalio, Warren Buffett, these older white men, people sometimes fail to realize, and this is something that I've learned over time, is that investments and hedge fund managers, they are rich old white folks, right? They're a little bit disconnected from the world. They have their Lamborghinis, their Ferraris, their Maseratis, their Bugattis. They have these very expensive lifestyles. They fly in private jets. They're not around normal consumers like you and I. And so when they started to see that, Facebook isn't the popular social media site anymore, they jumped off the bandwagon. And it doesn't mean that Facebook is not going to be profitable in years to come. It just means that it's transitioning, and there's going to be other ad revenue handles and things like that that Facebook is going to need to utilize. One of them being Instagram, the other one being WhatsApp, and using their advertising platforms to make more money that way. And so I see a lot of long-term value in Facebook. I got into Facebook actually back when I was, gosh, I want to say 19 years old. I got in back when it was like, oh freak, what was it? It was like $18.36 a share, and ended up selling my shares out right at about $70 a share, and have traded it ever since. But Facebook is a company that I just saw long-term value in. I mean, this is really in a market segment where there is no competitors. Really, Instagram, not even a competitor. Their value of a company is about 17 billion, and Facebook is well over $500 billion or $500 billion, so $500 billion market cap. No one is going to be beating Facebook in the social media market or social media arena anytime soon. So anytime you can pick up shares on Facebook for this price, I highly recommend it. What I'm going to do here, my big thing with Facebook is if you can pick up these shares anywhere between this range right here, 163, if it sells off, that is going to be quite the low. That would be back where we saw some support kind of happening a while back when I had actually bought into Facebook, was back in this range, and I had ridden it up. I wish I would have sold, obviously, for that nice 30 or 30 some odd percent return, but I didn't. I'm still up 10% in my Facebook position because I bought down in this area. Yeah, 8.4. So yeah, I am up about 10% in it still, but that was a small position. I wasn't in it in a large position anyways. The one thing I will recommend doing, like I said, is if you can buy Facebook anywhere between 173 to 175, you are buying Facebook at a very nice value. I would almost go so far as to say if you can buy Facebook anywhere from $180 to $173, you are buying that company at a great value. If you can pick up shares lower than that, great. I think buying anywhere in here and then holding quite a while out, you have a great opportunity. I'm going to have a lower cost average because I would have bought in here, and I would be down if I had to continue to buy shares, but that's why I've only taken a $20,000 position and have not done something like a $50,000 position, an $80,000 position, because I don't want to get too overinvested before I start seeing that correction happen. But I do see a nice little pop. I think we could easily see in the short term a nice little write up of about 5 to 6% where I could end up selling out, and then also day trading or swing trading Facebook because of that volatility of where it's going to be at, and where people are just unconfident in Facebook now because of the fact that it sold off, because a lot of these large hedge fund managers don't see the same value in Facebook like they used to. I think people are going to be a little skittish, a little bit scared of Facebook, and I like that volatility because it will allow me to profit and capitalize on those things. But if you are looking for a trade in a company, like I said right now, if you can buy these shares anywhere between $180 and $173 down here, you are buying them at a great price. And if you want the safest bet in the stock market, the literally safest place you could put your money, almost even, it's just as safe as a savings account, if not safer, because you're beating inflation. Facebook is the company that I would recommend right now. The revenues, the everything that I looked at in terms of the market, or the earnings report and the conference call, Facebook is really where it's at. So that is going to be the plays of the week this week. It's very simple, very straightforward. I want to keep these videos a little bit shorter, although 18 minutes is definitely not short. I think we got a lot of great information in this video. So thank you so much for tuning into Young Money Investments. If you have any questions, leave them down in that comment section. If you have any agreements, any disagreements, any questions like that, I'd love to hear from you. I'd love to have a little conversation. Love to explain some more about my thoughts and things like that. But thank you so much for tuning into Young Money Investments, and everybody, please keep this week green and have a great Sunday. Bye.